expenditure cycle audit objectives, controls, and test of controls. So, let's recap the concept of audit objectives derived from general management assertions about financial statement presentations. Say it with me. Existence or occurrence, completeness, accuracy, rights and obligations, valuation or allocation, and presentation and disclosure. But let us recall how these translate to specific expenditure cycle audit objectives, shall we? So, here are the relationships between management assertions and expenditure cycle audit objectives. Existence or occurrence. 1. Verify that the accounts payable balance represents amounts actually owed by the organization at the balance sheet date. 2. Establish that purchases transactions represents goods and services actually received during the period covered by the financial statements. And 3. Determine that payroll transactions represent wages for services actually performed during the period covered by the financial statements. Completeness. Determine that accounts payable represents all amounts owed by the organization for the purchases of goods and services as of the balance sheet date. 2. Ensure that the financial statements reflects all goods and services received by the organization, less returns for the period covered. 3. Verify that the financial statements reflect all wages for services performed during the period covered. Accuracy. Establish that purchases transactions are accurately computed and based on correct prices and correct quantities. 2. Ensure that the accounts payable subsidiary ledger is mathematically correct and agrees with the general ledger accounts. 3. Verify that payroll amounts are based on correct pay rates and hours worked and are accurately computed. Rights and obligations. Establish that the accounts payable and accrued payroll recorded at the balance sheet date are legal obligations of the organization. Valuation or allocation. Verifies that the accounts payable are stated and at correct amounts owed. Presentation and disclosure. Ensures that the accounts payable, accrued payroll, and expenses reported for the period are properly described and classified in the financial statements. Achieving these audit objectives requires designing audit procedures to gather evidence that either corroborates or refutes management assertions. These often involves a combination of tests of controls and substantive tests of details. As for input controls are designed to ensure that the transactions are valid, accurate, and complete. Control techniques vary considerably between batch and real-time systems. The following input controls relate to expenditure cycle operations. Data validation controls. Input validation controls are intended to detect transcription errors in transaction data before they are processed. Since errors detected early are less likely to infiltrate the accounting records, validation procedures are most effective when they are performed as close to the source of the transaction as possible. In the batch purchases system, validation of purchase orders occurs only after they have been sent to the vendor. Because of the inevitable transcription errors that occur in preparation of source documents, such as systems as characterized by the need for extensive error correction and transaction resubmission procedures, on the other hand, the real-time input of time card data can identify and resolve most errors as they occur. This approach also minimizes human data entry and thus reduces the risk of data entry errors. For example, when the clerk enters the employee number, the system automatically retrieves his or her name, mailing address, pay rate, and other relevant data from the employee file. So, here are the terms related in relation to this type of control. Missing data checks are used to examine the contents of a field for the presence of blank spaces. For example, an employee number missing from an attendance record, the quantity received value missing from a receiving report, or an incomplete mailing address in a purchase order record will cause the transaction to be rejected. When the validation program detects a blank where it expects to see a data value, this situation will be interpreted as an error. Numeric alphabetic data checks determines whether the correct form of data is in a field. For example, the quantity field in a purchase order should not contain alphabetic data. As with blanks, alphabetic data in a numeric field may cause serious processing errors. Limit checks determine if the value in the field exceeds an authorized limit. For example, if the firm has a policy that no employee works more than 44 hours per week, the payroll system validation program can interrogate the hours worked field in the weekly payroll records for values greater than 44. Range checks assign upper and lower limits to acceptable data values. This technique can be used to control orders placed with vendors. For example, a range of 500 to 1,000 units can be set as the normal order quantity for a particular class of product. A range check is also useful for controlling payroll transactions. Validity checks compare actual values in a field against known acceptable values. This control is used to verify such things as state abbreviations or employee job skill codes. If the value in the field does not match one of the acceptable values, the record is determined to be an error. And lastly, check digit controls identify keystroke errors in key fields by testing their internal validity. A check digit could be used to verify a vendor number on a purchase order record.